And welcome to Capital Market Live from Channels Television. I'm Will Ibang. First things first, let's check in on the markets and see how stocks performed for the week. We begin in Europe, where stocks closed lower on Friday as investors continue to digest earnings and the latest U.S. inflation data. The FTSE 100 ticked down by 1.24%. France's CAC 40 also recorded three-digit losses, while Germany's DAX was also in negative territory, down by more than 1%. UBS announced Friday it ended a 9 billion Swiss franc, that's about $10.27 billion loss protection agreement, and a $100 billion Swiss franc and a 100 billion Swiss franc public liquidity backstop that was put in place by the Swiss government when the bank took over rival bank Credit Suisse in March. UBS shares ended the day around 4.7% in positive territory. Now, in Asia markets, stocks were mixed on Friday after inflation in the U.S. came in lower than expected, raising hopes that markets could see a soft landing in the inflation fight. In Asia, Hong Kong's Hang Seng Index slipped 0.79%, while stocks in mainland China fell. Japan's markets were closed for a public holiday. Now, the Nasdaq in the U.S., the composite, ended Friday's trading lower and notched its second consecutive losing week in 2023. The tech-heavy Nasdaq slid about 0.6% to end at 13,644 points, pulled down by a sell-off in semiconductor stocks such as Advanced Micro Devices, Nvidia, and Micron. The S&P 500 inched lower by 0.1%, while the Dow Jones added 105.25 points, closing at 35,281 points. The 30 stock index got a boost from gains in Chevron and Merck & Co. Now, the domestic market, we saw a rather subdued performance this week as investors' interest in MTN, though we saw investors' interest in MTN and other Tier 1 banking stocks, ensuring the market closed in the green. We can see that the margins there, we saw two different margins for the all-share index and the market cap, 0.2 and 0.26%. That's the movement for the indexes. Also, the month-to-date and year-to-date returns were slightly higher at 1.5% and 27.5%. Elsewhere, weak activity levels persisted on the stock market as the trading volume and value decreased by 32.4% and 15.3% week on week. For the sectors, we saw the banking, insurance indexes recording gains, while the consumer goods, industrial goods, and oil and gas indexes declined. Guinea Insurance emerged top gainer this week, followed by the Initiates PLC and Chelarams, while John Holt PLC maintained its top losing position. The trio of Sterling Financial Holdings Company, FBN Holdings, and Universal Insurance led top trades by volume, accounting for over 518 million shares traded in the week. Meanwhile, the unlisted equities market, the NASD index, closed the trading week in negative territory. The unlisted equities index fell by more than 2.6%. Also, we saw turnover in the red. Volume traded fell by 94.45% to 1.01 million units, while the value dropped by 91.53% to close at 153.49 billion naira. Ardell Holdings PLC, formerly known as Niger Delta Exploration and Production PLC, topped the gainers chart for this week, while Friesland Campina Wamco led the decliners. And trading in top three are Ardell Holdings, UBN Property, and Mixter Real Estate. Now, joining me to review the activities in the market and other trending issues is Mr. Haruna Kabira, is Managing Director and CEO of Global View Capital Limited. Many thanks for joining us on the program, Mr. Kabira.
Thank you for having me this evening.
We've seen for the stocks, equities, seen a mixed performance for the markets. Is this going to be the trend for the week, the year, in the short term, the rest of the quarter, or do we see the market, getting bullish in terms of investors' interest in all sectors of the market?
Yes, we actually saw mixed last week, 2 days losses and 3 days gain, and at the end of the day, the market returned positive. But when you look at it, I think from the figures we've just said, if you look at it, that the banking sector and the insurance are looking up, I think it has no more to do with the unification of the exchange rate, which after devaluation hit the manufacturing sector account balances and threw them into humongous losses. And investors are worried of that. And the capital market is a zero-sum game. What this one is losing, this one is gaining, but because it is the banking sector that lend this money out. So what the manufacturers are losing, the banks are going to gain it. So by the time we begin to see the banking result in the market, I believe that we're going to see the market looking up.
You just mentioned the unification of the FX, which we've seen taking the consumer goods index and some of the industrial goods indexes taking a big hit from that loss. Are we saying that investors maybe did get excited from the policies that the current administration put in place, and now are they kind of disappointed as maybe say policy inactiveness? Do you see that happening?
No, it's not excitement. You see, IFRS determines that at every particular point in time you are rendering your account, you have to do mark to the market. And most of these manufacturing firms are into one facility or the other. So as at the time they were filing their result, they have to mark to the market. The cost of $1 was like 400 before. It is now 800, and that value. By the time it hit their position, that was why we saw those losses. But the only consolation I have, that peradventure there may not be another unification about Q3, so it might be a one-off. So
talking about the FX now and the naira shortage, we're seeing the naira hit the parallel market almost 1,000 naira now.
Do we have parallel market again?
well, we see that in the I&E window, we see it also trending. The volatility in the I&E window is really investors. Can this be sustained in terms of investors' confidence in the market? Is this not going to hit hard on investors that want to come into the market?
No, I really do not think so, because when you look at it, the manufacturers have a way of passing costs to the final consumer. If you talk about the bank, I believe no matter what the dollar is doing, I don't think it will affect the bank negatively. The only sector that was supposed to affect negatively is the manufacturing sector, which we conveniently pass the cost down to the consumer in form of higher prices.
So you're saying we're talking about that FX, and we've seen our reserves it's really trending lower week on week. We're seeing declines in our reserves, and some experts are saying that is not even the true position of our gross reserves. In terms of the net, people do not really know that. But we also got news that the CBN is owing JP Morgan and some of the foreign institutions quite a sum, in dollars. So is this not going to put more pressure on the dollar, on the foreign reserves? Because people are calling for the CBN's intervention in the FX market. Do you think the CBN is capable of doing that now, saying that it's owing so much?
Do you know what I've always observed? Information that are turning out from MBS, if they seem to be good, we say that they are not complete, but they are wrong. But if MBS come out tomorrow, I said that inflation is now 50%, you believe. But when they said inflation is ready, you said no, that is not supposed to be that they are manipulating. So I really do not believe in what the people are saying. But when you look at the intervention of the CBN in the FX market, why it might actually be difficult, they will need that reserve, which we do not have. You know that this is a consuming nation. By the time every importer will demand for that dollar, and the shortage is, the elementary economics that we were told that if there is a scarcity, there will be increase in prices, there will be hoarding, and there will be a black market.
So you're saying now that you talked about the MBS saying that you believe what they say. Last inflation data, remember the MBS did say that not everything was captured. So do you still say, do you want to take a stance?
No,
the figures are not sort of incomplete to say. Didn't take all the basket. We don't have everything in that basket.
No, I believe what they said is that the effect of the removal of fuel subsidy,
yes, it's not fully captured.
From 189 to 488, that was not captured. I believe, it's a body. They wanted to release that figure. So if they said okay, we have not been able to capture this. When they capture it, it will come. So that is why the next figure we are expecting will be higher than the last inflation figure.
So inflation, looking ahead, we're seeing for next week, that's Tuesday, expecting from the MBS, we're going to see elevated inflation numbers.
It's my expectation.
So we're going to just move up quickly to where we also saw in the news this week that the NGX and the SEC and the PENCOM are also trying to collaborate or deepen securities lending in the market. Could you just give us a bit of understanding what that is? How do we approach that? And PFAs coming into that space, what should the market expect?
First of all, the PFA are holding asset in custody for the retirement savings account holders, which is me and you, because if they administer it wrongly, it's going to backfire on us. So to a very large extent, they were not allowed to lend their securities. What is security lending? It's just that the NGS trading machine is designed in a way that you cannot sell what you don't have. You cannot short sell. So security lending is the person that owns that security lending to another person that want to trade. Let me tell you, why do you want to lend? We just talked about the unification of FX hitting the balance sheet of a manufacturing company, and their prices came down. We saw Guinness coming from 70 naira to 55 naira. We saw Nigeria Brews coming from 42 naira to 36.50. If you have done maybe research so well and you are expecting that to happen, you borrow Guinness and you borrow Nigeria Brews and sell Guinness at 70 naira. Sell Nigeria Bread at 42 naira. If they come down to 36.50, you buy Nigeria back at 36.50, buy Guinness back at 55 naira. What they do is necessary that I have the stock, you want to sell my stock. The only thing you need to do is to approach me through a security lending agent. You will take my stock and sell. The only thing is that the delivery, you have to deliver my stock. If it is 10,000 units of Guinness that you took from me, you will not settle me in naira. You give me my 10,000 naira. But the snag there is that if peradventure that you take that, you have done your homework so well, and the market did not follow your homework, and you have sold my Nigeria Bread for 42 naira, and the market now moved to 16 naira, you have to deliver. You have to deliver my Nigeria Bread at 16 naira.
So what if you borrow my stock now and I need it at this time and you're not able to return my securities to me at that moment? What happens? No, these are some of the risks we have to
Yes, all those risks are embedded in the security lending agreement. The terms, you see that if it is callable, that means I will tell you I need my stock, or if it is deliverable at the point of time you are supposed to deliver. Peradventure, 90 days. On the 90th day, I want my stock. Or okay, when I need it, I will call for it. And don't forget that because of fear of default, there's always it's always collateralized. There's always a collateral which is equal and above the value of that security that is lent.
You're looking at the pension assets now. We're currently at about 16.1 trillion, as at May 2023, and then it's projected to hit about 19 trillion in 2024. Do you see the pension administrators, being risk-free from this securities lending? What if they make a loss? And then you said there are retirement savings. They are saving for retirees. What if they lose retirees' money?
One of the things I would tell you concerning the PFAs is that they cannot be that negligent. But beyond that, like I said, all terms are clearly stated in the security lending agreement. And there are other things we're supposed to do. The collateral, the value of the collateral. There is collateral swap. If peradventure that what you're giving to me is no longer as much, maybe there's diminution in the price, it's no longer measuring up to the value of the stock that I said there is a swap. Then again, there's what they call mark to the market. So what they're supposed to do is to do mark to the market on daily basis.
So we just want to say now, so investors, is it very popular in Nigeria? Just very quickly, is this a trend? Is this a pattern or a kind of? Is this very popular in
No, it's a novel idea, okay. And I believe that if PFA come in, it will be more robust than the way it has been. Because if you look at it now, how many equities are there to be lent? But I believe because PFA normally do buy and hold, waiting for a period to execute. But now, if they are involved in this security lending, they can make extra income from doing so. And
that also boosts the liquidity in the capital market.
To increase the daily value, to increase daily volume, it also increase daily deals.
Thank you so much, Mr. Haruna Kabira, Managing Director and CEO, Global View Capital. Thank you for your time this evening.
Thank you for having me.
Next, we'll discuss strategies to keep winning in the market. That conversation right after the break. Stay tuned. This is Capital Markets. Welcome back. If you've just joined, this is Capital Market Live on Channels Television, and we're turning our attention to portfolio rebalancing and how investors can stay ahead of the market play. Joining me virtually to discuss this is Mr. Rotimi Olubi, Managing Director, ARM Securities Limited. Always good to have you on the show, Mr. Olubi.
Thank you for inviting me once again.
So we've heard the term portfolio rebalancing ahead of Q3 numbers. I just want to know, give an explainer, what is portfolio rebalancing?
Okay, so portfolio rebalancing refers to a process where investors change the weighting of their investment portfolio, looking at the different assets that they have in their portfolio, and then if there is a deviation from an original investment plan in terms of weighting of the different assets in the portfolio, then a rebalancing is required. And then a rebalancing is required because the investors usually would have their risk appetite. They take that into consideration amidst a desired result that the investor intends to make from that portfolio. Hence, there's a need to periodically look at the weighting of those assets in the portfolio and then change the weighting.
I'm sure there are some strategies to this because I might not be able to just rebalance my portfolio if I don't have a certain strategy, is there?
Yeah, there are strategies that investors consider before rebalancing their portfolio. One of them is time-based rebalancing. That is, naturally, some investors will just say, okay, every quarterly, I may need to look at my portfolio to look at the weighting. And then if there's a deviation, I rebalance, reconstitute or rebalance the portfolio. Another thing, some other time, some investors may look at it in terms of semi-annually. Okay, every half year I rebalance my portfolio, or annually. So there's a time-based rebalancing strategy. Also, there's what is called strategy. So, for example, you have a different assets in your portfolio. One is doing very well, the other is doing poorly. So you may consider, an investor may consider, okay, this one that is doing very well, why don't I sell a little of this and then buy more of these other assets, so that the weighting is also not, there's not much deviation from the weighting. And also, the investor is also considering the risks, his own personal risk appetite. For example, you might have a particular asset in your portfolio doing 100%, while the other one is doing a minus 50%. So, the mantra in the investment market is to buy low, sell high. So at every time a particular asset in the portfolio is maybe underpriced, an investor might decide to sell the one that's made so much appreciation, and then also in a bid to also buy more of the one that is maybe underperforming, in a bid to also gain better return into the future. Some call it averaging down a losing asset within a portfolio, so that your weighted average cost is much lower for an optimum return on investment. So that's a threshold.
Okay, so I just want to know, are there risks to this portfolio rebalancing? What are the consequences?
There's actually risks to portfolio rebalancing, because at every time you are rebalancing, you are either over trading, and there's also cost associated. There's transaction cost. So those are basically the common risks in portfolio rebalancing. Because if you have to rebalance your portfolio, very often, that is, you'll be paying so much in terms of transaction costs, and that's also impact your return.
So you mentioned the frequency with which investors should rebalance their portfolios, but what factors also do you think that should decide this frequency of rebalancing?
Okay, so factors that could determine the frequency of rebalancing is investment goals and time horizon. For an investor that is looking at a longer time frame in terms of his investment journey, because investing basically it's a journey. So it's a journey towards wealth creation, wealth preservation. So you have some investors that have a 5-year horizon, some have 10 years. So the longer the tenure of the investment horizon, the less frequent an investor may need to rebalance his or her portfolio. But the shorter the horizon, the more frequent an investor may need to rebalance his or her portfolio. So investment goals and time horizons are very, very, very veritable to consider in terms of frequency of rebalancing one's portfolio.
Okay, so if I have to rebalance my portfolio, it involves selling my assets, buying another asset, there are opportunity costs. Doesn't it seem like I'll be missing out on something if I have to keep selling off and rebuying? I might miss out on something big. Doesn't that happen, or it's not something that happens often?
So there's opportunity cost to everything. You can't win everything in the investment market. That's why a goal is very important. What do I want to achieve? Before an investor starts an investment journey, there's a need for clarity of purpose. What am I doing in the investment market? Because I'm susceptible to the volatilities of market. You can't win all. I think Kabiru mentioned that in the investment market, it's usually a zero-sum game. So what one gains, the other loses. So at every time you're exposed to the market, someone is coming in at the same time somebody is leaving the market. So, but the difference between the two different investors in the market is their investment goal. As soon as investment objectives are achieved, there might be need to leave the market. An investor cannot win completely all in the market. So that is certainty. So the way to hedge is to have a goal. What do I want to do? If I'm investing in the market, either the plan is to buy a dream home, either the plan is to send a child to school, either the plan is to retire. So all those things impact on asset selection within a portfolio. So basically, and then once risk appetite and risk tolerance, they are very important before an investment journey is considered. And then asset volatility is also very important. You're looking at the volatility of the asset. For someone that is a little bit younger and can take a lot of risks, the portfolio may constitute more risky assets. So just because of the investors' risk appetite. For somebody that is older, may consider maybe more defensive selection in terms of asset mix. And then now may also impact return. But the point is that preservation of capital may be more of a priority. And the market conditions are also part of the things that investors would consider in terms of where to put their resources, or more or less of their resources, basically. Okay. And then also investors usually would have their own personal strategy, maybe skewed towards religion, for example. I may not be buying a brewery securities just because I don't drink alcohol and all that. So some of those things might also be a personal in terms of a mix of investment selections.
Okay, so how can I measure my performance as investors, to say, measure the effectiveness of their portfolio rebalancing strategy? Can you give us very quickly how investors can measure this so that they're staying in line with their goal? As you say, they have to stay on a plan.
Yeah, so the way to measure is their benchmarks. Like for example, if for investors that would consider maybe equities in their portfolio, the NGX All Share Index is a benchmark to consider. If maybe perhaps for the equity side of the portfolio maybe overweight some certain securities that determined the direction of the index. So one can benchmark with the All Share Index. I think in terms of constituting portfolios, some may decide to pick selections from the NGX 30. So if you have selection from the NGX 30, an investor can benchmark performance with the NGX 30 index to consider whether they are beating the market from time to time. Those are benchmarks that investors can use to measure performance of their rebalancing strategy.
So investing is a journey. Investors should take that home and know that it is a long-term thing. It's more like a marathon. Thank you so much, Mr. Rotimi Olubi, Managing Director, ARM Securities Limited. Thanks for sharing your perspective on the program and those insights. Truly appreciate it.
It's a pleasure. It's a pleasure. Thank you very much for inviting me.
Now we move on to other stories where we're seeing that the central bank has released its consolidated financial statements for the first time in 7 years. The bank and its group profits for the year was 65.62 billion naira and 103.85 billion naira accordingly. Total operating income for 2022 stood at 2.2 billion naira from 1.7 billion naira in 2021. At the same time, 20% of the net income of the bank will be credited to retained earnings, while the balance will be paid to the federal government in line with the provisions of the Fiscal Responsibility Act 2011. Finally on the program, let's bring you some of the key expectations for the Nigeria's capital markets in coming weeks. Attention will be focused on July's inflation figures for the National Bureau of Statistics expected August the 15th. At the bonds market, traders are expecting the outcome of this month's bond auction holding on Monday, August the 14th, to influence sentiments in the secondary market. At the auction, the DMO is set to offer instruments worth 360 billion naira. Now over to the Treasury bills market. Following expectations of lower liquidity in the system, next week traders anticipate that market participants' demand for bills will moderate, and this will result in higher yields in the Treasury bills secondary market. Now for the money market, the overnight lending rate is expected to trend upward as Monday's bond auction will exert pressure on system liquidity. And lastly, at the equities market, mixed performance is expected from investors as they rebalance their portfolios following assessment of half-year corporate earnings released so far. And that's it on Capital Market. Join us same time next week. Don't forget, you can watch this again on our channel's television page on YouTube. Also follow us on our other social media platforms to get updates. I'm Will Ibong. Goodbye for now.